Ladies and gentlemen, good morning. We are honored to have three of the region's leading figures to spend about half an hour with us on stage now and just pick up some of the themes that we've heard about this morning, and I'm sure others as well, but particularly oil, safety, and investment. So without further ado, I'm going to ask the three to join me on stage. If I can ask Thierry Antinori first to join. Thierry is EVP and Chief Commercial Officer of Emirates Group. Welcome, Thierry. Next up, my good friend and erstwhile colleague, Alex Kyriakidis, President and Managing Director of Marriott International for the Middle East and Africa. Alex. And of course, Gerald Lawless, now Head of Hospitality and Tourism for Dubai Holding, and of course, recently appointed Chairman of the WTTC. Welcome, Gerald. Gentlemen, good morning. I think we've all heard quite a lot of food for thought, if you might describe it that way. And perhaps picking up just where David's left off, and maybe I can start with you, Gerald, if I may. Freedom to travel. Obviously critical, obviously a huge concern, and perhaps really in the headlines at the moment. From your perspective, are we doing enough as an industry, and particularly in this region, what do you think we need to do that would really return confidence to travelers?
Well, I think first of all, and thanks very much, the presentation really brings it home how important it is to have freedom to travel. But as David has said, it doesn't mean that there's going to be any dilution of the need for security, because people will not travel if they don't feel secure, if they don't feel safe. People will not travel if there are terrorist incidents occurring like we've experienced over the last several months. And I think you've got to try to divide it into two things. At the moment, we have the immigration influx for a different reason than the kind of terrorism, although connected in various ways, that we have seen. And I am encouraged to see what the governments of the European Union have now finally done late in the day, but they've done something about trying to secure the frontier borders, say in this case the southern borders, because if, say, Greece, Italy, the Mediterranean countries are not assisted in ensuring that they've got good border control by the rest of the European Union, then the rest of the European Union is going to suffer. Schengen is suffering already, and I always believe that Schengen has been one of the most incredible steps forward that any government, any set of governments have taken, and it would be a shame now to see any rollback on that. But the deal that's been done with Turkey, it is beginning to produce results in that there are fewer migrants now coming through. And of course, we all recognize that really the big solution to the problem of this kind of migration is to try to resolve the Syrian civil war. And that's very sad that that continues to go on, very sad for this region as well. On the other side, the freedom to travel, where we now talk about that we do not think there's any dilution of security by being much more logical in the approach in terms of having a global electronic visa platform. And I think we should take best practice of Schengen, best practice of ESTA, best practice, for example, in Australia, where they've come up with very powerful e-visa programs. And we all know at the moment this is not really anymore, when you look to see whether a person is suitable to come to your country or not, it's not really about the country of origin of the individual. It's very much about the individual. And with the WTTC, with the World Economic Forum and the UNWTO over the years, a certain amount of progress has been made, but I think the two issues are should be disconnected. And trying to get a better electronic visa program going worldwide is something that I know we're working on, and we will continue to work on for however long it takes. Because ultimately we should all be able to have our own individual electronic visa. You have to agree that data is going to be shared. In any event, even if you go on a paper visa, your data is probably shared. But we are heading in that direction of having a common platform. It will involve Europol, it will involve Interpol, and it will involve governments of the world. But then you can see other countries wanting to join in if there is a logical program put in place in the first instance by areas such as the European Union and the United States.
So it is very much about data, and we don't want to use the word profiling, but it's understanding the traveler, it's understanding the individual. I mean, how do you think that would get picked up in this part of the world specifically, and do you think it would be welcomed?
I would think it would be very much welcomed. We all know that now, as long as almost 15 years ago, His Highness Sheikh Mohammed bin Rashid Al Maktoum, he came out for the United Arab Emirates and allowed a visa waiver program for about 30 different nations. And look what's happened with tourism to the United Arab Emirates since then.
But in the region
I know
generally?
there are lots of other reasons, and in the region generally. For example, Saudi Arabia this morning, and one of the benefits of the diversification brought about by the oil price drop, Saudi Arabia have now said they want to reopen for tourism. And to get that far, to even get an announcement like that, I think is extremely positive. And of course they will want a very sophisticated electronic visa system. We certainly need a bit of a better system than we have at the moment in terms of, as David said, 63% of people still have to get a paper visa, still have to go to a consulate. So it would facilitate travel, but we believe as well that it would also enhance security to have more of the electronic visa platform.
I guess that's the critical thing. And Alex, picking up on this, I mean, obviously a slowdown in the region in terms of inbound. Are you seeing a sort of corresponding uptick in intra-regional travel, and how are Marriott, for instance, compensating for the shifts in demand that you've experienced? Because they're pretty unprecedented.
Yeah, they are unprecedented, and I think, like Gerald has said, we're working on encouraging governments who are most affected to really focus on security at the borders and ensure that once again the consumer feels it's safe to travel. At the moment there is significant challenges with tour operators, flights coming into certain destinations as a result of the concern. Now, in terms of kind of how we are responding to this, I think there is two ways. The first thing that we're noticing is that the Arab traveler is becoming extremely important to the overall travel equation in the Middle East region. That number today exceeds 50% of all of our room nights right across the region. And that's a segment of the market that we are focusing on extensively in every way, both promoting clearly within country, but also making sure that we understand the needs and requirements of the Arab traveler as they travel around and come to our hotels. What is different? What do we have to do differently to welcome the Arab traveler into our hotels? So that's kind of key. The other thing, frankly, is deploying strategies that ultimately for our owners make sure that we continue to give returns in some markets that are very, very challenging. And here, it's all about a strategy that says, how do you actually take market share and improve market share? If the market is soft, either because of geopolitical unrest or because you have excess supply, an inflection point where supply overtakes demand, such as, for example, the point in time we're in right now in this market, and in Doha, and it will, as we go forward, have every confidence correct itself. Well, the response has to be that you make sure you win market share. So you can demonstrate to your owners that you are doing your absolute best to bring that business into the hotel. Last year we're 6 percentage points up in index, and this year so far 6 percentage points. So these are the strategies that we're deploying in these times, but particular focus for us is the Arab traveler.
And you're effectively creating, in some ways, a new market, right? You're providing a product, you're marketing maybe to a population that historically has been, would you say, possibly overlooked in some ways?
I would say it's a population, frankly, that has traditionally chosen to go elsewhere. If you look at this summer, for example, I mean, the demand for travel outbound into Europe is impacted by what's going on in France, in Brussels, and therefore, in some respects, here's an opportunity. In other parts of my region, if you look at Egypt, you look at South Africa, the exchange rate of the dollar has had an impact that's actually encouraging people to stay at home. It's expensive now for South Africans to travel outbound. It's expensive for Egyptians to travel outbound. And so what you're seeing is a domestic market really being a huge driver of growth in the interim period. So there are these dynamics as well as a result of the exchange rate.
So let's just pick up on this, because we've obviously heard, I think very eloquently this morning from Christoph about the impact of the oil price, what's happening, the component parts of that, and obviously the exchange rate element of that. And here with us we have Thierry, who obviously is with Emirates and obviously probably experiences the impacts of this literally day by day. Thierry, is obviously more travelers, more people moving around means more planes, more business. Is the oil price decline actually good for business, or is it completely knocked out by the strength of the dollar, given you're buying oil in dollars? I mean, what is the reality from inside the airline of the situation?
Thank you. I would say short term, of course, it's a good news for an airline. Emirates had 39% of its cost 2 years ago being fuel. So if it's going by 50% down, it has a positive impact short term. But it mirrors also difficulty in the global economy. It mirrors slowing down in corporate travel. It began with oil and gas industry. It's continuing now with other industries. Company changing travel policies, company slowing expenses, reducing the number of meetings, incentive, congress, short term. So at the end, it's still looking good for us regarding the bottom line, but not as good and as much good as you could see, because as a consequence, it was mentioned by David before, in a non-consolidated airline industry worldwide, with the power of the media and social media, the transparency of internet, the mega search opportunities, the shift and the cost base decrease is going directly to the customer. So the customer is a big winner. And this added with the capacity deployed by airlines, with aircraft having been bought in good time, but coming in more difficult time on the market, drives yields down. So it means you have some markets, like let's say today Australia, it was in the media several times, the airfares have been not as cheap in Australia, point of sale Australia, than today than in the last 30 years, 3-0. So it means you have a short-term operational advantage, but shift in some patterns. And if you combine that with currency volatility, making some markets, as Alex mentioned, different, some opportunities there. If you want to go today and travel to South Africa, coming from here, for instance, or coming from the States, or coming from Europe, you have a fantastic value for money. But for people like us, cashing a lot of money out of Europe, each euro we cashed in the Emirates cash box in the last 12 months brought 18% less dirham in the bottom line. So it means it's volatile, but it's not changing the name of the game, because it's 1, 2, 3 years. And at the end, it's about mindset and agility. If your mindset says the glass is half full, and we are on a global positive growth trend, because today we have 7 billion people in the world, and we all agree it will be more than 7 billion in 10 years, and we all agree these people will travel more, will have more income and more mindset for mobility. We see the perspective good. It's a question of continuing to growing now, not losing the opportunity now by slowing things. And it's a question of agility. So the mindset to continue to do the work, and the agility to optimize short term, where we can outperform our competition, change our mix faster than the others, understand the patterns faster than the others, to not to bleed from the today's situation. So, and in the airline industry, we are a very, very nice position, because you have different kind of customer. You have not only tourists, You have also workers traveling every year between Philippines and the rest of the world. So these people, they are volatility resistant, crisis resistant. That's why Emirates, we opened 2 new cities this year to Philippines. You have countries that still grow a lot. China, it was mentioned before. What are we doing this year with the new aircraft? We opened 2 new points in China. We have point of sales that still continue to grow, point of sale where we have positive currency effect, point of sale where it's more difficult. So it's a question of continuing, managing through the mindset and using the volatility to your advantage to take a higher share short-term of a maybe smaller pie, because the good thing is if the pie becomes bigger, your share will grow with the pie.
So agility is obviously critical. You've mentioned it
Yes.
several times, and and Alex has referred to, rapidly changing demand patterns. It's obviously a sort of a bit of a moving feast here. You've got to keep on top of it. Gerald, Dubai has historically set itself some extraordinarily ambitious targets. 20 million by 2020 is obviously out there at the moment. Most people, I guess, have sort of varied between skeptical and then surprised, apart from probably people like you who've been sort of integral to it and at the heart of it for a very long time. What needs to be done still? What's still on the to-do list to get to 2020? And particularly, if I may, lodging, and how is that going to change in the pipeline? And to the point Thierry just raised about airlines having too much capacity, do you have a concern about too much capacity potentially? And I hate to ask you, but what role might Airbnb play in all of this?
Well, I often tell the story how when I first lived here between 78 and 82, and I think it was about 1981, the Hyatt Regency opened. And at that time, an expert from one of the hotel companies, said, we now have enough hotels in Dubai, we've got 6 hotels, that's plenty, right? Now, if anybody had listened at that time, thank goodness they didn't, where would we be? And, necessity is the mother of invention. And as we add on more and more supply, one would say, if I was Halal Al-Meri in charge of tourism, I would say, well, that is good, because now I've got capacity. If I was Thierry Antinori, I would say, that is great, because I'm bringing on more and more aircraft and more airlines. And indeed, if I was Alex, I would say, well, that's great as well, because I can now run more hotels, being the biggest hotel company in the world, having taken Starwood into Marriott. So there's lots of opportunity there, but it doesn't mean that there is not challenge. Of course there's challenge, and of course we have to work at that. And to achieve 20 million by 2020, I think is an achievable target. It's a target we've got to go for. We've got to open new markets. We've got to encourage airlift from all angles. I'm really very, very encouraged to see the development of theme parks and the Dubai parks, particularly as it stretches down towards Abu Dhabi on the southern side, down towards DWC, and we can see how that can develop very nicely into Expo 2020, which in itself is encouraging a lot of extra business. And the time to promote, as far as I'm concerned, the destination is when it's strong, when it's weak, no matter how it is, we must keep promoting it. And I think Dubai has been particularly effective in promoting itself. And even to see now how the United Arab Emirates, Ras Al Khaimah is very active, Sharjah is active, as indeed I'm sure Fujairah, and very much Abu Dhabi is as well, with Etihad Airlines bringing in as much business as they can into not only the Emirate, but the Emirates. After all, the theme parks will only be, about 35 minutes away from Abu Dhabi. Yeah. So there's great opportunity, but not without challenge. And just to mention about Airbnb, people call it a disruptor, but I see it as another competitor that has come on. It's a way for people to be able to travel. We saw the lovely movie from David of I Am Travel, and people who want to stay with a family. For me, I'd prefer to be nice and private, staying in a lovely hotel. But that's me. There are people who would like to experience staying with families. There's also a very large inventory of apartments in this city, for example, who might have been bought by investors who are not necessarily occupied by the family, that would also be available. All we say in the industry, and Alex probably is much more into this than maybe myself, but what we say is, well, let's have a level playing field. If you're putting your apartment onto Airbnb, pay your municipality tax, pay your taxes, have your fire life and safety to the same level as you would have if you were staying in a hotel, because Airbnb owes that to their clients to ensure that there is safety in staying in an Airbnb premises. But otherwise, it's just another way of supply into the market. It's a competitor.
Fair enough. So we've heard the dreaded tax word now. Alex, if I may, the discussion around the introduction of VAT in the GCC, I think we can all appreciate that governments are looking for new ways in which to generate income against the backdrop of obviously what is a commodity crunch. And not everyone is equal in that, so some people are worse off, as we heard earlier on, than others. Good or bad for the hotel industry? I mean, how's the perception from the industry in the run-up to that potentially happening?
It's not consistent. And I think I would start by saying that fully appreciate the need for the GCC governments to look at alternative sources of revenue, given the shortfall in their budgets as a result of the oil price receding. I think that this is one where you need to take care, because in some markets it's a very fine balance. Some countries in the GCC today have no taxes, no service charges, such as the Kingdom. And then you have markets such as the UAE, for example, where even within the UAE there is no consistency. So in Dubai, for example, we have the service charge 10%, you have the municipality tax 10%, and then there is a room tax for serviced apartments, where it's on a per room basis, 4-star 15 dirhams, 5-star 20 dirhams. And if you add for a family of say 4 or 5 staying in 3 rooms, that's 60 dirhams per day. And we begin to stack up that little level of tax, if you like, or duties, and you then consider, okay, I'm going to add another maybe 5% on top. You need to be very, very careful and make sure that what we don't do for this industry is aim to generate tax but actually reduce demand overall, because there is a fine point at which you begin, another 5% on an already 20% stack plus room charges. It begins to have an impact on the consumer. So this is the one thing we would say needs to be very carefully thought through, particularly with cities and governments who are hanging their hat on travel and tourism. It is clear that this Emirate absolutely is on travel and tourism track, enormously successful. As a result of the March data, we already have this quarter the highest RevPAR in the world is here in Dubai. So when you get to that stratospheric level, it's great news obviously for investors in this industry, great news for us and the other stakeholders, but you've got to look at it from a consumer perspective. And we very much hope and encourage that the governments also look at the broader implications by segment. You may have the VAT, but you may decide you're going to exempt certain sectors because of that balance that I mentioned earlier.
You don't think the industry would effectively eat it in some way? I mean, obviously they want to pass it on, but to the demand point, if you see demand shifting negatively in a significant way, then you've got to.
I think, Nick, it depends. The market, even if I go back to Dubai, because we should talk practical examples, turn the clock back 6-7 years ago, 70% of this market was upper upscale luxury, 30% was mid-tier budget. Today and into the future, it's going to flip the other way around. Upper upscale luxury, another 5%, would it really affect buying decisions? Probably not. But once you get to mid-tier and budget, another 5% could make a difference. All really we are saying is, let's make sure that good work is done on assessing the economic implications before pressing the start button.
And sorry, Nick, you might also ask the question, should we be paying 10% municipality fees as well as paying 5% VAT? Perhaps one falls into the other.
Does feel like it's sort of double dipping a little bit, doesn't it? But you can understand if you're sitting there with some fairly tough policy decisions, you've got relatively few levers to play with. Thierry, looking forward to 2020 from Emirates' perspective, if I look back, over the last 30 years, you've enjoyed unprecedented growth. How on earth are you going to keep that up? I mean, is the opportunity now as great as it ever was in your view, or do you think there's a natural sort of plateau, or have you not worked it out yet and you've got fingers crossed?
No, as I mentioned, we definitely bet on growth and profitable growth. And there is an opportunity for the people having the best agility, best teams, best products, best brands to be winners. And
but do you think there is more growth to go for?
Absolutely, because of demography, because of geographical location of Dubai, because of the 1 billion people living in Africa, 2/3 of the population worldwide living in Asia, Europe staying, and US a status to have the first trip for a Chinese to Europe or for an Indonesian to Dubai is great. So we firmly believe in a virtuous circle. We invest in more planes and in bigger airplanes. This year we will introduce 36 new aircraft in our fleet. We will retire 37 even, sorry. We will retire 26 smaller aircraft, older aircraft, and we will add 37 new and bigger aircraft, mainly 380s. It means our fleet will be younger and bigger. So the cost of operation will go down through the economy of scales. The average size of an airplane will be around 413 seats in 2016 for Emirates. It means a real estate of an airplane where you can develop a better product, a better comfort, better light, better air for the customer, so you can inspire him to work on this airline. You have economy of cost in the production, and so you have room for one shifting short-term market share in stagnant environment from the airline competition, because we have a better product through your fleet and your aircraft. And you can have a good pricing and value for money through your size. And the cost of production you decrease, you can reinvest partly in the brand and the product. So the virtuous circle for us is to continue to invest more and more in the brand. Brand Emirates, but also Middle East, Dubai, UAE. Emirates invested 20 billion dirham, it's $6 billion in the last 20 years in advertising just for Dubai and UAE. Will continue. And because of the social media, because of the distribution, because of internet, and our customers are speaking about our product. Our products are becoming our ads. And so we have a better and better cost of production, a better and better customer recognition, a larger scale, so we'll continue to grow. And it means between now and 2020, we have 112 firm orders that will come to the fleet. It's 25 new aircraft per year. We have a network today from 150 destinations. We add 6 this year. We increase the number of frequencies, and we put bigger aircraft on 40 of our existing routes this year only, and we'll continue the journey in the next year. We deploy the 380 next Sunday to 2 new cities, our flagship, the 380, Taiwan and Prague. We will be the sole operators there. It will also bring inspiration. We have today the 380 on 40 routes, and we'll continue. So we are definitely ready, and it's the good old tradition of the Dubai leadership and the successful one. You do not wait. You prepare today, and you build today what you will need tomorrow. If you wait 3 years to say, oh, what will happen, knowing already today the demography will play in your favor. The consumer mindset and the income will play in your favor. The geographical location won't be different, so we'll continue to play in your favor. Why to wait 3 years? Well, invest now, prepare now what you will, as a good farmer, get tomorrow.
Dubai has always played the long game. Alex, I think you wanted to come back there on something.
Yeah, no, it's really complementing what Thierry was saying. The partnership between Marriott and Emirates is phenomenal in every respect, multidimensional. But today 1 in 7 people who land with here in Dubai cross to get into Dubai. The other 6 continue elsewhere. As Emirates grows, if that ratio is maintained and maybe even hopefully improved of people entering, those 60,000 rooms in the pipeline will be filled in the same way that the current 120,000 are. And that's an important point.
You know, we have a lot of initiative in the mid-market, and I joined Emirates 5 years ago. We have 65% growth. At this time, we had 15,380, we have 75 today. But the share of the Dubai point-to-point business stayed constant. We didn't add to sell more Hong Kong, Manchester, or Birmingham, Kuala Lumpur. Because of the inventory of Dubai, because of the investment, hospitality, because of the new parks, because of the new events coming, and because of the inspiration given by Dubai to some people, because of the backyard here, you have 1/3 of the worldwide population living 4 hours flight from Dubai. We were able to keep this ratio, and we are developing the Dubai stopover product with you guys and with some others. So, as I said before, it's a question of mindset, agility, and not waiting maybe too long to prepare today what you will obviously need tomorrow. After that, if you have a better product, a better customer proposition, a better value for money, you will, even if it's not going like predicted, shift market share from your industry competition. I do not think that the airline taking service from the customer, decreasing the brand investment will win in the future. It's about brand and people. I do not think that a stewardess working for an airline taking something to the customer is motivated as a stewardess hearing from my IO customers, wow, good. So that's the mindset to answer your question.
Sadly, and I know what the mindset in the audience is going to be on, which is coffee. We're probably going to have to cut it off here. As you can see, we could probably talk for a fairly long time about this. I think the view is obviously stays, very clearly optimistic. But to let you all go for coffee, could you briefly say thanks to the panel, and I'll do the same. Thank you, gentlemen.
Thank you very much.
Thank you.